Yo, when I said I was back, I wasn't playing. Why did my chair just basically break? Damn, man, nobody wants me to succeed. You thought this was a game. You thought I was playing. I'm not playing, man. I'm here. My chair thought I was playing too. They think I'm soft, man. I'm here, ready to rock with you guys. I'm gonna lean back too. I'm gonna get comfortable. I dare this chair to mess up again. You feel me? But if you don't know who I am, my name is Swaggy C. Pleasure to meet you. If you do know who I am, my name is still Swaggy C regardless. Appreciate you for coming back to the channel. My energy is always on 1,000 and we are here to look at the market as usual. Today we are talking about, or this particular video, my strategy per se, but more so the things I do before getting in the trade, while I'm in the trade and after the trade. I'm doing this thing where I'm tracking trades and I'm tracking pairs and doing live trading as well. This isn't one of those videos. This is more so the video telling you what, like the process behind it. For example, the tracking video, again, I'm gonna post that video. I don't know if I'm posting that before this or after this. If I post it before this, you already know what I'm talking about. If I post it after this and this comes out beforehand, then essentially that's just literally just me just live trading before, after, you know, showing you guys the entire process along the way. This is more so just explaining it so you guys can have the concept in your head and kind of go about it in that route. Kind of give you an updated strategy for myself, because I know a few months back, maybe last year, I did like my day trading strategy step by step, and that kind of doesn't apply to me anymore. You know what I mean? I kind of like to refine it when I come across new information, new things. Little heads up, this strategy is not a guaranteed make money strategy for easy profits. It's not that at all. This is just my strategy that I like to do. If you like it, see if you want to implement it within your own strategy. If you don't like it, great. Hopefully you can take some like some type of inspiration or some type of knowledge from this video that you can apply to your own trading and create your own foundation. We're all trying to get better together and collectively, so let's do that. Otherwise, before I get into the video, go to theswagacademy.com. Be a member if you want to see more videos like myself and be a part of the team and the community. Other than that, let's get right into this setup. Let me put my glasses on. Should I cue the theme song or not? Let's just cue it. So, getting right to the charts. So, first thing I do is make sure I have the pairs that I want to trade on the watch list, no matter what, no matter what. These are the 5 pairs that I kind of usually stay around, more so than not. I don't like to, like, you know, go out to other, you know, pairs. Like, you won't see Euro JPY on here or USD JPY on here because I don't trade those pairs. I'm comfortable with these 5 pairs. Now, I don't trade all 5 of them throughout the week. I try to stick to like 2 or 3. Sometimes even 1, but AUD USD, and they're all in order depending on the week, is like terrible right now for myself. Like, it is consolidating, it's not doing nothing. Gold's not doing too much either. GBP USD is literally in this whole consolidation range. If you see my GBP USD tracking within the academy, you would know for sure, like the whole outline of this. And as far as GBP AUD, it looks pretty good. I'm going to make a move on it when it gives me a little bit more direction. Euro USD is the only one that is giving me clear direction, and I actually was trading this pair. That's why you guys will see the Euro USD tracking either before this video or after this video. But usually what I do is go to a blank chart, and the first thing I'm looking at after I look at the watch list and make sure I have my pairs here, make sure, you know, your chart is something you like to look at over and over again. Like, what I mean by that is you're going to be staring at this chart every time you come to your computer, right? And you're looking at trading. You know, sometimes if you guys are on MetaTrader, okay, MetaTrader on your phone really, really quickly, you know, or if you trade on your brokerage, that's really quick as well. But even that, anything that's on a computer, make sure you like the screen you're looking at, because you're going to be looking at it for a good amount of time. I got my candles purple and black, and sometimes I can switch it to just pure black if I want to. Depending on how I'm feeling, but today we're going to stick with the swag chart, and I got my moving averages on here. So I have everything I need to do before trading. Now, for myself, again, you guys know I don't like scalping at all. I see the reward of, you know, spending as little amount of time on the charts and trying to make as much money as possible. But the same can be said for swing trading as well. You know, swing trading, you're spending as little. I can even argue that I spend less time swing trading than scalping, because I'm analyzing the market for a longer direction. A longer can mean anywhere from 2 days to 2 weeks, right? Or even a little bit longer than that. And I'm looking at it and I'm placing a trade whenever the market is good enough. Let's say in the ideal, scenario. And then I'm not on the market for the next 2, 3, 4, 5 days, however long it takes for it to hit my take profit. I can come in and adjust my stop loss along the way and move it to profit or break even. Or if I'm losing, then try to, figure out why I'm losing and maybe cut my losses short, depending on what it is. But, scalping, you're in, you're out, you're in, you're out, you're in, you're out. It's a lot of, high anxiety, and I can't take that myself personally. So swing trading, I look for, trades I can hold for at least longer than a day, at least for myself. There are some intraday trades that I may take as well. I'm more of a swing intraday trader, but for the most part, I do like to hold. So I'm making sure I'm trading the pairs that are clearly going to trend in a good direction and not just trend on like a 15 or a 30-minute time frame. Because you can look at this, and this is why I don't like intraday as my overall strategy. It used to be like that. It changed as time goes on. Even scalping, because look, there's about 1 million trades you could have made off of just this alone. And this is only like a few days ago, right? So many trades. What is it? There's a downtrend, there's an uptrend, there's a downtrend, there's like an uptrend, there's like a higher low, and it's so many different things where it's like, if I just looked at it on a daily time frame, it's clearly just an uptrend. Even starting from right here, it's an uptrend. Even starting here, it's an uptrend. Even on Heikin-Ashi candles, you can kind of see that it's all green. A little bit of red, green, a little bit of red, green. So that's kind of where I like to be at. So I will start my charts on a daily time frame, and then I will have 2 charts side by side, right? 2 charts side by side for sure. The one on the left side is a daily. One on the right side is the 2-hour time frame. It's either a 2 hour to 1 hour. Left side is either daily or 4 hour, depending on how I'm feeling. But right now, let's start off on a daily, and here let's start off on a 2 hour, right? And from here, I'm gonna make sure that I'm drawing some levels that are near price. I'm not worried about the levels that's down here, or way up here, because if price wants to get there, then we can just adjust it as time goes on. All that matters is what's in between like these lines right here. So this is where price currently is right now. So I just got to identify a low and a high, and that's it, right? So for me, I'm going to draw a line down here. I'll draw it right here, yeah, 121 flat. Draw this huge line, this huge zone right here that price can easily jump into. And I don't usually like my zones being this big. I usually really don't at all. But since I'm keeping the charts clean and there's not much on here, I can deal with that right now. It's all a personal preference. And there's a high. The high is right here, right? So me knowing, a little bit of quarter levels, a little bit. I don't trade that way like a lot anymore, but I do keep in mind the levels, right? And this is 1.225, right? So it's the quarter level theory is 120, 122.5, 125 every 250 pips. Again, like I said, I used to trade that way. I don't trade that way like solely anymore, but I still keep the levels in mind, and I still trade it from time to time. So I can see why this is a major area of resistance, whereas 122, which is a psychological level, it's a round number, is not so much, right? Because of the quarter level. I've noticed over my experience and my time, looking at the market, that the quarter levels are reacted to more strongly by price than just a regular 1.23, 1.22. Those numbers are very strong as well. But 120, strong. 122.5, strong. 125, strong. 127.5, strong. 130, strong. You know what I mean? So I can see why that is a major area right there. Price right now is making lower highs, as I can tell. That's all I really need right now for the daily, just to kind of figure out where I'm going to go. And then I go to the 2 hour over here and kind of draw like something smaller that I can kind of see and pinpoint. And again, with the Euro USD tracking video, I had a mini zone right here. And the reason I had the mini zone right here, and it's not like at some round numbers, because this is where price reacted to. You got to be smart. At the end of the day, you can't be stuck in your ways. And again, as time goes on, you get better and better. And I used to be stuck in my ways. Like, I don't care if price stops here. If it's not at a round number, I'm not placing a level there. And you don't got to place a major level there, but you at least got to, acknowledge the minor levels. And this is for sure a minor level. If you can see, you know, price, if I can drag it down a little bit more. Sorry guys. Price reacted 1, 2, 3, 4, 5, 6, 7 times. Broke above, great. When it came down to retest, 1, 2, 3, 4, 5, 6, 7 times before coming back up, right? So I have this right here, and I don't want to just replay it and be like, what would have happened? Because literally I was there when it happened. Price was literally here. I had a counter trend line here, and if I pull up my actual Euro USD chart, you guys can see it. Had this here, and then I had a Fibonacci from, I believe, here to here. If I'm not mistaken. Wrong ones, or it could have been this to this. Let me figure out where exactly my Fibonacci. This one, let me see. I don't remember. It was this. Okay, this might have been my Fibonacci. Let me actually go to the chart really quick. Let me go to one, because this is the second one, right? Let me go to the first one. This is the first one. Okay, yeah. So let me see where my Fibonacci was placed. Yeah, my Fib was placed down here. Top up here, I drew circles on here as well. So let's go back to the chart we were just at. Okay, so yeah, glad I placed it the same way, right? Same way. Go back to the daily. Let's go back to the two side by sides. We have it here, and then I have my 27 extension up here. So, you know, my strategy for this one, this is more of an intraday trade that I don't like placing as much, but in this scenario, this was an intraday trade where the strategy is I'm just only going to hold it to the 27 extension, right? So I'm going to give you guys a lot of keys throughout this video, and I'm going to, you know, hone in specifically on certain things I say in videos to come, as I already have it, you know, in videos I've done in the past and in my academy of all sorts. But here in general, I'm focused on the Fibonacci extension because this is not telling me it can do something long term, right? Because there's a major zone up here that price is not seeing it's able to be breaking, and there's a major zone right here. So all we can do is play what the market is giving us right now, and the market is giving us a 27 extension, and it hit that. And again, that's in the Euro USD tracking video, right? Okay, boom, hit that. Now that it hit that, we got to look at it from a long-term point of view now. So now let's go back to one. Let's just look at it, right? Once it hit the 27 extension, it looks like, you know, a lot of buyers have, you know, taken profit. Sellers are trying to push it back down a little bit. And we're looking at it on a daily time frame, even a 4-hour time frame. We can kind of see clear as day. If I can take the Fibonacci off right now, right, and take this, I can get the counter trend on right now. You can see how the market is still making, you know, lower highs, right? So look at this. It comes up and it makes a double top, right? Top, down, top, down. This is an M formation. Moving average crossover, but it stopped at this 1.32500 level, a little bit above, but still this zone, right? Comes down, comes up, and it comes down. Now, this structure looks very, very terrible because in a downtrend, it's lower highs, lower lows, lower highs, lower lows. It's very, very structured. And you may get that for the most part, but sometimes it may look ugly. You just gotta figure out, what is price telling me? And right now, price is still making lower highs at the end of the day. You know, this is a high up here. High up here. Let me actually draw this down. Boom. Let me, where's my clone tool? I don't even know where's, oh my God, I don't have my clone tool. I don't know why. Okay. Here, let me just copy it. Boom. Right there. Lower high, same over here. Another lower high. If this sticks, right? Because this is still a 4-hour candlestick. We still got about an hour and 50 left, as you can see over here. If by the end of the hour and 50, this just pulls up, then this is not a lower high. But I'm assuming, let's just assume this just closes how it is right now. Then we can kind of see and kind of tell that, okay, this is kind of a, you know, it's going to get lower highs and hopefully lower lows. And especially if the daily closes in about 5.5 hours. Now, oh my, I got an Amber Alert. Wow. Amber Alert, black Chevy Suburban. Okay. Somebody catch that guy. Right? Okay, back to here, right? So what I'm looking at right now is just looking at the overall direction of the market. So when it comes to like the strategy that I have for myself, I'm not looking at, okay, what is the market gonna do right this second? No. Because look at this. The price just dropped a good 30, 40 pips right now. And it just looks super ugly to me. You know, looking at a 30 minute and a 15 minute, and a 1 hour for analysis, it looks ugly. You know, the 4 hour and the daily for me looks way more structured, way more calm, way more relaxed. You can get the same profit as a scalper if you use bigger lot sizes, right? Use bigger lot sizes and hold them over time, or hold them for a day or two, the same as a scalper using small lot sizes. You know, a scalper is not going to use big lot sizes and they're placing 100 trades a day. They're just not going to do that, because you're going to get margin called. You're not going to win every single trade. Your risk to reward still has to be intact, you know? Whereas a little bit of swing trading, intraday a little bit, but a little bit of swing trading, you can kind of hold it and kind of get away with a larger lot size, knowing you have the breathing room able to withstand the loss, and it's money you can afford to lose, right? Long story short, let's say we take this counter trend off, right? Amidst this, even though this got higher than here, overall structure is still lower high, lower high, lower high. What I'm thinking is price, so let me actually backtrack for a second. My strategy is always, if the market does this, then I do that. I am a reactive trader. I am not the market has to do this, has to do that, right? So what you guys gotta know from me is that, let me actually show myself for a second. If I can go back to the software and show myself, right? So let me take this water out, no free publicity, right? But no, I'm more of a reactive trader. If the market does this, then I do this. I'm not the market has to go up, has to go down. So that's a key from this video. Understand the market does not have to do anything it doesn't want to do, period. It does not have to do anything it does not want to do. So I found it better to have an analysis both ways. I will have an analysis, the market goes up and the market goes down. I have a bias towards what it's going to do if it breaks this level. So the major part of my videos, as always, and is the alerts, right? So with these alerts, first I have a bias for both ways, and then I'll place an alert right here and write the alert. I'm not going to write it out here, but write an alert below here and then potentially above here, depending on where I want to enter. And I will place it on both sides, not hedging. Hedging is actually placing the trade on both sides. I'm not hedging, and hedging is also legal in the United States when it comes to Forex. But I have an alert on both sides, so if it alerts me that price is breaking up, then I can be on my phone and look at it and be like, okay, let's wait for a retest and then let's get in for a buy up here. If I see it down here, same thing. Retest of this little mini barrier and then come down here. And the goal for price, if it breaks this area, is to get to 121. And again, the goal, if it goes up, is 122. That may sound very, very simple, but what I mean by that is those will be my take profits. That's not me just saying, oh, it's going to get to 121 eventually or 122 eventually. No, that's me saying if it hits my alert down here, right? If I can get a close below down here and it hits my alert, and I probably would place my alert right a little bit above, like maybe like right on this barrier, because if I place it down here, the market already moved. I already missed the move, right, to get in. If I place it right here, then I can get an alert, run to the office, or even look at it on my phone and watch price and watch this time frame as I'm doing something, whether I'm with my wife or at the gym, or even if I'm in the office, right? Watch it. And if I can see a close, then it's like, all right, then I'll try to scale down to a 15-minute, 30-minute to trying to get a good entry, to get in. Like I will use the 15 and 30-minute for entries, but not for analysis, not for long-term direction. And then I will, this will be my take profit. So that's why I'm saying 121. It's not that, oh, eventually it's going to get to 121, because over the next year, it's probably going to get to 121, 122.5, 125, 130, all of that. But if the market hits here and closes and hits my alert, my take profit will be 60 pips below here. And same if it breaks here. If it breaks here and closes below, I'm looking for it to get to this major area at 1.20 flat. I'm not having to take profit right here. I'm going right to 1.20. Now, if the market does get here and just reverses up, then you adjust. That's why I said you react to the market. But if price breaks here and closes, then I'm looking for 121. Same with above here, right? If price comes down here and retests and it doesn't, break through and it wants to come back up, I'm going to see, price start to make a higher low and look for an entry. And hopefully, if it does that again, I'm more inclined to think that price is going to get to this barrier, right? If it comes down here and can't break again, I'm inclined to think it's going to get up here. So I'd probably place my alert somewhere. I wouldn't place it right here because it's right there right now. I'd wait for it to get down here and then place my alert above. If it just goes straight above, maybe another alert right here, but who knows? But alerts are my best friend when it comes to this market. Within the course, I'm going to make this video, like I said, a little bit longer so it can be within the course, right? Like if you're watching this video right this second, it could either be a course video or an academy video, right? That's the same thing. Excuse me. An academy video or a YouTube video. YouTube will probably get just this chunk, like the first, I don't know how long I'm going right now, 15 minutes, right? And then the next 20, 30 minutes will be just for the academy members only. Showing you the exact trackings that I did and you know, a little bit more deeper analysis on everything. But that is really my strategy. Like when it comes to this market, I'm looking at, you know, my watch list. I make sure I'm active on it. I'm making sure that I understand what day it is. I understand the fundamentals that come out. So with the fundamentals, I'm looking at this over and over again to make sure that I'm not missing any news. I will use, you know, Forex Factory or Kitco on YouTube or, you know, Bloomberg, just anything that, you know, I feel like can affect the foreign exchange market. I am looking, you know, don't listen to, well, I mean, I'm not going to tell you not to, you know, necessarily listen to anybody, but do not listen to anybody who, you know, is saying fundamentals don't matter. You know, they do matter, right? So I'm making sure that I'm paying attention to everything while also understanding that this market is emotion driven. So, you know, when it comes to certain resistance levels and support levels, I understand that price does not have to react and just reverse off that support level just because it did 3 times in the past, right? You know, you got to understand, like at those 3 moments, there were a specific number of sellers and buyers in the market that forced price to reverse and go up. At this time, price is coming down, and it may be more sellers this time that breaks the barrier. Who knows? So I understand that, you know, each trading session is different, right? Even though I can use, you know, clues from the past to help me figure out where, you know, what price is going to do, I understand each trading session is different, right? I understand that I'm not emotionally tied to any, you know, specific trade. If I lose, I lose. I win, I win. I understand I'm here for a job, and now I'm talking psychology to you guys, just the overall strategy as a whole. I understand fundamentals is just as important as technicals. So I got to be up to date on everything. Like I want to make sure that the pair I'm trading does not have any news that's coming out this week. If it does, what are the news? So I was looking at Euro USD and breaking it down for you guys. I know tomorrow is they have ECB releasing, you know, for, you know, monetary policy and all the interest rates and all that stuff, the economical, you know, outlook of the economy. What is it? CPI, Consumer Price Index for the United States tomorrow. I was thinking of ECB, the economic outlook, doesn't really make sense, but same thing. CPI is for the United States tomorrow. So, you know, Euro USD has been kind of stagnant a little bit before that, the tracking trade that I did to that 27 extension. Overall, I'm not anticipating any major moves or major like up or down until those news releases. Next week, I don't think there's any major news, but again, you always got to look to see if any news is coming out, and then read articles. You know, Forex Factory won't tell you the articles that's going to come out, right? So you got to look at, you know, articles on Google. I'll give you guys specific articles within the course to read. If again, this video is a longer form video within the course, like after I stop it for YouTube purposes, it should be a PDF that you can download. It should be a list of a bunch of articles that I tend to look at over and over again. But other than that, that's kind of what I kind of focus on. I also understand that my alerts kind of dictate when I trade, and I got to make a video on this as well. But I'm trying to put this in the right way possible and not get y'all confused, right? So I am a firm believer that you should, you know, focus on a session, you know, per se, I guess. But I'm not a believer that you should only trade that session, because I know schedules change. You know, schedules change over time. You never know what could happen next week. You could be in an overnight shift next week at your job, and then the next day your schedule changes, right? It just depends on what you do. And me, I'm more of a late Asian, early London trader, right? And Euro USD traded, you know, mid London to like early New York a little bit, right? But my alert went off at the time. So if my alert went off, I'm going to trade more times than not. So it just depends. I'm not so much focused. One of my keys when it comes to my overall strategy is I'm not more so focused on the session I'm trading. I'm focused on a little bit because I want to know like the volatility and if there's any news coming out, and if we're in the New York session for the United States, or we're in, you know, the London session for Euro, you know, or GBP USD, right? But I'm more so focused on the risk management part, right? As long as my risk management is more or less the same, the session doesn't necessarily matter to me. As long as the setup is good and my psychology is good and the risk management is good, that's more important than the session, because your pair may move during a different session. I'm not gonna miss out on that because it's a different session. If I feel like I know what it's gonna do, I may be wrong, but if I feel like I know what it's gonna do, and my alert went off and it's telling me it's a lot of volume right now, as long as my risk management is the same, I'm kind of good. I think that should be all. Let me look to see if there's anything else. So, for example, if I'm looking at GBP AUD, I will look at all the news online and especially this on TradingView to make sure nothing is coming out. And then I look at the technicals, obviously for sure, and make sure I see the two barriers. Like I said, always have one above and below just to make sure to see what it's doing. And if I want to scale down to the 2 frame, this is still Euro, I believe. Yeah, still Euro. Yeah, there we go. Let me delete this. The drawings, great. So I have this right here, and I have this up here. Now this isn't showing because I drew them on before I locked it. Now if I lock it, if I draw anything on this side, then obviously it'll relate, right? But looking at it from this point of view, when it comes to GBP AUD, I'm looking at it. Let me actually take the cursor on. Let me actually try to copy this. Let's copy it. All right, okay, we just copied it over. It is right here, essentially, right? Okay, cool. Yeah, so we copied it over. So we have a support level right here, hit, miss a little bit, miss a little bit, miss a little bit. But we have a support area right here, right? And we have a major area up here as well, right? So to kind of refine it and get a little bit closer, let me actually delete this and just get one closer, and just move it in and just focus on what price is doing right this second, right? I'm not focused on what it's doing way below. We can talk about these supports and why it stopped here and here in a second, later down the line. But if we're just focusing on just this right now, if you see over here, just this, we kind of want to see what it wants to do. And what I'm waiting for is if price can break here and close below, and got to go a little bit lower actually. You got to go at least 40 more pips below for me to really look at GA and be like, all right, it's going down all the way to 180, right? Long term for me trading, if it breaks and close below here and going to 181, then 180. So I always try to go to the next psychological level. If it breaks 181, I'm looking for 180. If it breaks 181 in the upward direction, I'm not looking for 182, but I'm looking for 182.5, 150 pips up because of the psych level, right? As you can see, it's right on the psych level right now, 182.5, and it's having a hard time kind of breaking it. 1, 2, 3. So this is why I kind of keep the quarter levels in my mind because, at least around it, like I'm not even gonna move it, I'm gonna keep it there, but just around this level is where it's having trouble with breaking. So I needed for it to break here, but above I need for it to clear this area because as you see, it got right here and then in one candlestick it just broke all the way below. So this is why I'm not really a fan of the day-to-day grind intraday trading because you can trade all this up and then in one candlestick, this is a 4-hour time frame. You've been in this trade for about 2 days now, if so. And then one candlestick, it just erases that, right? When I mean 2 days, if you're an intraday trader, you're in, you're out, profit, in, out, profit, in, out, profit. You're buying, and then boom. It just got all the pips you gained over the last 2 days, it just erased it. Long-term trading, you're not really focused on it, right? Like if I'm entering right here and it goes up, let's say I'm entering for a buy. I'm not necessarily worried about this because right now I'm break even, and same you would be if you're an intraday trader as well. But I'm not worried about it because I gave myself enough breathing room. Whereas if you're an intraday trader, this is a 4-hour time frame. So if I go to the 15-minute, let's look at the 15-minute for a second. For intraday traders, they may got to worry about losing several times because you may get in for a buy right here, stop you out. Okay, it comes back up, get in for a buy, stop you out. Get in for a buy, stop you out. Get in for a buy, stop you out. Oh, okay, right here, I'm getting for a sell. It goes up, stop you out, right? So like all the intraday over and over trades, I'm not worried about that. Where it's like just place one trade, big lot size, maybe 2 trades, you're in profit. Maybe take profit, or if not, if it comes back down, you broke even, hold the trade. Your stop loss should be a good enough breathing room, and we got to talk about stop losses too. And then you hold it to your take profit. But also, again, if you are in this much profit, right, up, down, up, chances are you are, if you got in right here, let's say you got in right here, you are 30, 40 pips in profit, and if you have a good enough lot size, that's a lot of money, right? So of course you want to move your stop loss into at least break even or at least in profit. So if it comes back down and this happens, you at least got stopped out in profit. So keep that in your mind as another key. When your trade is 30, 40, 50 pips in profit, you should move your, well, this is kind of what I do, right? Let me actually go back to myself on the software. I guess kind of what I do, right? If I'm 30, 40, 50 pips in profit, I'm going to try to move my stop loss into break even, if not into profit, right? Now, the biggest thing is, giving your stop loss enough breathing room to actually make the trade, right? And then when you do that, then great. You don't got to worry about these 5, 10, 15 pip stop losses. But I feel like I've said enough for a YouTube video. I'm getting really, my throat is getting, tired. I've been, doing videos back to back to back. I need some water. And then I got to do the other half for the Academy members and then make that all together. But the first half on YouTube and then put all of it on the Academy. I believe so. But yeah, that's really my strategy that I kind of work on. I'll go into deeper within the Academy. But I think you guys kind of get the gist of it a little bit. Meaning I'm more looking for longer term trades. I'm not opposed to swing to intraday trading. I just don't like it on a day-by-day basis. But if this trade calls for intraday and I'm only supposed to be in it for 5-6 hours, and so be it. Like Euro USD today, I was only in it for about 7 hours. Like, cool, great, cool. Got to the 27 extension, great, end of story. But it's not my preference where I'm looking at the market trying to get a trade every single day. I like to place 3 or 4 trades a week, hopefully, and just hold them until the end of the week, or maybe one trade even longer, even over the weekend. That's also scary. I don't recommend that because of market gapping and stuff. And again, everything I'm talking about in this video, I'm not like recommending. I want you guys to do your own research and kind of compare what I do with what you do, or compare what I do with somebody else to see what works the best for you. Test it out in a demo account. Do not use real money until you are comfortable and it's money you can afford to lose, but test it out. See how you like it. Like for me, I've tried the scalper route in 2015, right? Didn't like it. Too hectic for me. I tried the intraday route from 2016 to 2020, right? For 4 years. And I liked it, right? It was cool. But as me and my wife get more into our marriage, and as I get another dog, I got 2 dogs now, and I'm doing other business ventures, I don't have time every single day to try to find 10, 20 setup. I don't. My time is more so placing bigger lot sizes and holding them, right? But for you, it may work for you scalping, intraday, swinging. No answer is the right answer. Your answer is, well, it kind of contradicts itself. But you guys get what I'm trying to say, right? No answer is the right answer, but your answer is the right answer. Even though that contradicts myself, I don't care. Blah, 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 blah. You guys got a video. I love you guys. I appreciate you guys. Like I said, head to the Academy, the swagacademy.com, and the new website will be launching in about a month. There's a whole bunch of stuff going on there. If you're in the Academy already, you don't got to worry about it. You'll be grandfathered in. Other than that, I will see you guys on the next video. Do you guys see how turned up I am right now? I am legitimately sauced, right? I'm tired, but I love you guys, and scene.